Sure, sure. And in the last quarter, you had mentioned that you were looking at a small acquisition of a facility to help you in reaching the 1,000 crore number. So any further updates you can give on that?
We have identified, shortlisted a facility. However, we haven't reached at the documentation completion stage, so don't want to say anything beyond that.
Sure. Not asking for a guidance, just in terms of understanding if everything goes smoothly, what is the earliest timeline for commercialization? This is just to understand what timelines it takes typically.
We continue so as we had mentioned earlier, we want to by end of this year, so FY25, we want to be ready with the additional facility for being able to deliver the growth if that's possible. So we continue to try to do that.
Yeah, we will be able to update you better by end of next quarter.
Okay, got it. And last question from my side. In your trade generics and institutional business, can you give us an indication of what percentage is institutional? And can you tell us a little bit more about the institutional part of that business? Like in terms of margins, how much is it lower than your distribution business? Or how lumpy is it and how you're seeing, government traction in that segment after the budget?
Yeah, sure. See, one is the breakup we are not providing just from a competitive information perspective, right? But what we are seeing is that, programs like Jan Aushadhi and programs like Ayushman Bharat, which provide insurance coverage to very, very large number of below poverty line, people. They are also covering the medicines which are going to be consumed by those patients who are covered by insurance. And this is where government is ramping up the procurement through various institutions, because if the patients try to buy at full price MRP, then again it becomes out of reach for them. So this what we are seeing is that, you can see even in government's announcements where they have said that 8,000 Jan Aushadhi Kendras are going to be somewhere like 26,000 in the next 1.5 years, right? So there is a very big push. We see that in the overall, just as Jan Aushadhi being one representative of one institution in the government, right? We see that in overall, numbers of Jan Aushadhi itself, which are publicly available. So we believe that this space of trying to address the large, unserved population in tier 3 rural areas, almost 5.5-6 lakh villages, is fundamentally only addressed through two means. One is through the government space, institutional, where they buy and dispense the medicines themselves. And second is through trade generics, where there are no medical reps trying to visit doctors, because fundamentally it's not possible. How can you have a sales force that covers 6.5 lakh villages? So these two verticals are there and they are mutually reinforcing to some extent. Whatever we sell in trade generics, we are able to bid for those kind of products in Jan Aushadhi and other government tenders to institutions. So they are mutually reinforcing in that sense. And in both cases, we end up, as a producer, increasing our reach and getting our products out. So, this is why there is a great interest in this space, not just from our side, but also other industry participants. And we continue to be bullish about it.
Sure. Any comment on the margins on the institutional side versus your distribution or versus your base OSD business margin?
See, the margins actually vary, in case of institutional, vary too much product to product. What we endeavor to, however, is as a basket, we want to maintain at least the material margin level between trade generics as a vertical and CDMO. So that is how we strive to, and we have been maintaining it like that.
Sure. Thanks. All the best. I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Windlas Desai from Turtle Capital. Please go ahead.
Hi. Good morning, everyone. Am I audible?
Yes.
Yeah. Hi. So my first question is, on the dosage forms. I think, we kind of started injectable as a new dosage form. But as a company, in next 3-4 years, how do you look at expanding the dosage form, for us, both organically and then inorganically?
Actually, we are very keen to look at expansion in dosage forms because for the simple reason that it serves all three of our verticals. We will be able to improve our breadth of portfolio for CDMO, trade generics, as well as institutional. So this is something that is a very important, growth, aspect for us and strategy for us. Now, injectables we decided to do on our own, primarily because the facilities available for sale in injectables were very old, and GMP considerations, quality considerations did not make it a prudent approach to buy something and then retrofit it and try to do it like that. So we built this one. And in terms of other dosage forms, there is a great opportunity, we believe, in other dosage forms like, ointments, soft gels, hormones, steroids, eye drops. There are so many other protein powders. There are so many other dosage forms where, we can do this play again and again. And we are looking at options, both in terms of, we have an open this thing. So our goal is to see wherever we don't need to do something, on our own, and a good asset is available that is profitable and is meeting our criteria, then we would go ahead for that. So this is something that we want to do it. We are looking. There is no nothing from my side to give you a concrete update as such.
Okay. The reason I'm asking this is that, some of the dosage forms are more difficult to enter into and kind of scale up, like steroids or hormones. So those kind of dosage forms, whatever that you want to acquire will come at a, generally these kind of things are not available cheap. You have to pay high, and so kind of do you weigh in vis-a-vis, how difficult it is to create those capabilities, and if it is very difficult or time taking, you would be willing to pay a reasonable price and acquire for some of those difficult dosage forms? I mean, how are you guys thinking about it?
Yeah, absolutely. See, we are very conscious of making sure that if we acquire something, it has to be absolutely in line in terms of our ROC expectations, our ability to grow what we acquire, what is the spare capacity there, and so on and so forth. So the make versus buy, balance will always be there. Our criteria is that we want to, if we do find something, we have to do it in such a way that what we are paying for is justified by the opportunity it gives us in terms of expansion within and growth within what we acquire. So it's a self-justified way to look at something. So that's how we are thinking about it.
Yeah, we are not against paying any premium we understand that oral solids versus oral solids, then hormone facility would have a different premium. If there is a additional business addition also we are getting, there will be some more premium. So we are not against paying premium for a facility if it makes sense. Having said that, also if how we look at it is, we want injectables now that new facility we have built in. If we start, we reach a particular level where then that we start calling it our existing strong business. It becomes part of that. We are at that level, and by that time we do not get anything outside, then we can consider building something internally. If there is nothing available, it's not that we won't do anything for 5 years. It's not like that.
Okay, got it. Very useful. Second question is on the export side. I think, even in earlier interactions, we have always mentioned that the growth on the export side will be back-ended because of the registration requirement and the scale-up time that it takes. Now, if I understand correctly, we have been after this export thing for a couple of years or more. So I'm sure that the registration in various markets that we are interested in should be in place. So given that, do we expect much better growth, from this or next year onwards, the hockey stick scale up that we all were expecting on the export side? Are we nearer to that? And if so, any timeline that you can give?
Last year, if you see, we have delivered about 30% growth although it's a small base, but that is the kind of number that we delivered in FY24. We continue to work on it, but in export segment, it is very easy after you reach a particular base number to expand from there. To reach there, there are several factors. I can assure you that we are working on all those factors. In past, however, what has happened is our expected timelines didn't hit, or something or the other kept on coming. So I don't want to, anyway, we are not giving a particular guidance against any segment, but we are working on all those things. We are at different stages for those different things. So we would expect in a medium term good numbers in exports. Yeah.
Okay. And any monetization? Sure, I'll come back in the queue.
Please come back in the queue. A reminder to all participants, in order to ensure the management is able to address questions from all the participants, please limit yourself to 2 questions. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Hello. Hello.
Hi. Yes, sir, you're audible.
Yes. So my primary questions were like in the core CDMO business, we have seen in the past that the growth rates have been somewhere around 10-12%. But is there any reason for us now to believe that those particular growth rates can go up to around, let's say, 15-20%? Is that possible? Or that would be my first question. And my second question would be on the injectable side. Since our fixed asset terms we are talking about is only 1.2 times, my understanding would be like until we don't double this capacity, we won't be able to make a proper ROCE out of it. So what would be the timelines in which we can actually scale the current capacity and also think about actually doubling the capacity?
So let me answer your second question first. As we updated, when we constructed the injectable facility, we have a spare floor over here, which allows us to add capacity very, very quickly. So all the surrounding infrastructure for that is already there. But of course, any new initiative that you have to give it the required time for customer audits, approvals, stability data, and all of that to come through, and then add capacity. Otherwise, essentially you are just putting it with extra cost, right, with no immediate benefit. So we are very watchful of this, and rest assured we will be the first people to add capacity before its capacity becomes a concern. So we will not let it go in that manner. There is a inbuilt facility has the right design to cater and give us the best outcomes. In terms of your first question, which is around what is the prognosis in the
Structural
CDMO.
growth rate.
Sorry?
No, structural growth rates in CDMO, right?
Yeah. It's as I mentioned in my opening remarks, if you see the volume growth in Indian pharma market is very small, 0.7% year YOY. And so it's what is then driving the improvement in our numbers, or let us say the CDMO segment's numbers. I believe there are combination of internal as well as external factors. So we have, of course, fine-tuned our own internal, business development teams and focused on executing to get, better wallet share as well as get new business from the customers that were added. So there is an execution element, and which is the most critical one, by the way. And then there is a second element which we have always talked about, even when we got listed, we talked about this, that the new Schedule M is putting focus on the quality of manufacturer who is making the products for the marketeer. Because now marketeer is equally responsible for defects in the product. They can no longer say that I did not manufacture it. They are equally responsible. And I believe that it is leading to change in thought process in a lot of companies who are saying that in order to comply, why not go to a better manufacturer who's got a professional setup, available capacity and strong track record of delivering. So I believe that the growth is a combination of both of these things. And hard to predict, but what gives me a lot of comfort is that we have shown a similar pattern over last 6 quarters, not just for 1 or 2. So, of course, we want to try to keep this up, right?
Okay. And I just missed the initial part of the call. So when is the commercialization of the new injectable facility expected to happen? Can we see something in Q2, Q3, or would it be later?
So, the injectable manufacturing requires that when you take commercial batches, which are the first batches of any product, you have to incubate them for stability testing for 3 or 6 months, depending on what the technology is and so forth. So all our batches which are being manufactured right now, they are all commercial and they are against orders, and they are all being incubated for stability. Our first, we expect mid Q3 and really actually Q4 for revenue to come from sale of those batches which are already manufactured, and of course subsequent batches don't have that wait period anymore.
Okay, but does that mean, Hitesh, basically we are going to keep manufacturing, and at that point of time, when the stability whole period is over, we can sell whatever we have manufactured for the first 6 months in a bulk or something of that nature, or is that a wrong understanding?
Kumar, please rejoin the queue for more questions.
Yeah, I will just answer that. Yes, whatever after the first 3 batches data is completed, anything that we manufacture on the same product, we don't sell, but as soon as the first sale happens for that product, all batches that have been manufactured can be sold in lump.
Okay. Thank you.
Thank you. The next question is from the line of Rishi Kothari from PI Square Investments. Please go ahead.
Hello. Thank you so much for the opportunity and congratulations with set of numbers, and also giving on the updates on the injectable business. It was really helpful. My question is regarding one of the comments that you made in the future after as to we are looking more towards the brownfield expansion. So apart from the plant acquisition that we are recently looking by the end of the year FY25, any other brownfield expansion that we are looking at in terms of the any diversification from the current product that we have?
No. So other than the facility that you also mentioned that we are going to acquire and the plant to expansion that is going on within the plant, we do not see any major capex coming in unless there is some M&A that comes across. We don't see any major capex. Maintenance capex of 10 to 12 crores every year that we maintain. We don't also see any spike in there.
Okay. And the plant that you will acquire by end of the year FY25, that will be mainly for which product that we are targeting?
That would be for the similar oral solids capacity expansion. We are building that.
Okay.
Same dosage form, yeah.
Okay, sure. Thank you. I will turn back to you.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. Given the capex that we are doing for some debottlenecking in our...
Sorry to interrupt, Mr. Ankit. Could you come a bit close to the handset?
Sorry. Is it better now?
Yes, it is.
Yeah. So given the capex that we are doing, in which is expected to be completed in Q2 on the OSD side, how important does the acquisition of or the inorganic opportunity that we are seeking become in our overall growth plans for FY26 and 27? If you can highlight about that. And secondly, on the acquisition, if you can throw more light on what are your criteria, what size are you looking to acquire, and if you can share some details on your criteria and like how important is the acquisition for our overall growth in FY26 and 27.
See, the goal is to be ready to serve 1,000 CR revenue by end of this year from capacity perspective. And so both the things that we are doing, plant to expansion and the new facility that we want to acquire and make it ready for us is in that line only. So we want to be able to reach 1,000 CR revenue without any capacity constraint.
Sure. So given the run rate that we have currently of around, let's say, 175 crore per quarter, plus some additional revenues which will come from the expansion that we are doing. So, the new capacity or the new acquisition which comes in should have at least a revenue potential of around 200 to 250 crore is what we are seeking for.
Yes, from a capacity perspective, surely. And if more we can do, we will definitely do that. I will also like to address your other question in terms of what kind of M&A assets we are looking. We are not targeting a size, right? For us, the idea is to add to the breadth of our business, which can serve all three verticals. So the quality of the asset is the most important thing. And how much can we grow if we acquire that asset? So that is in terms of the business that can be increased in that asset. So those two are the most important criteria. We have not given any size limitation to our bankers, in terms of, okay, show us only below this or show us only above this.
So it will not be, let's say, an asset which is going through a tough time because of the new regulations which have come in. We want a quality asset where, they have established customers and established, quality standards, which are at par or with our standards. This is what we are looking at.
Yeah, very true, Ankit, because, it takes a tremendous amount of management bandwidth to turn something around, right? So, unless it's a complete slam dunk, that's not what we are looking for. We want to go with a quality asset that can be built on top.
Sure. And my second question is on...
Mr. Gupta, please rejoin the queue.
Sure, I'll do that.
Thank you. The next question is from the line of Rohan Vora from Envision Capital. Please go ahead.
Hello. So thank you for the opportunity. So, sir, I had two questions. One was on the API price environment and the outlook. Have the prices stabilized and what are your views on that? The second question was, as I remember, we had introduced some of the injectable products, in our channel even before we could start production to just, be ready as our facilities become operational. So how has the response been from those products? Was the second question. Thank you.
Yeah. In terms of your first question, what I can say in general, as a sort of a, without any sort of numbers or this, but the general impression is that API prices are stable, and in fact, to some extent, in some molecules, the common molecules, they are coming down. Okay. Our CDMO is a cost plus business, so obviously it is that that is there. In terms of our own channel introduction of injectable products in our TGX division, yes, we have done this, and the initial procurement was from outside, and in some products we are finding some good this thing. We are building the distribution network around this. So while I cannot give you numbers, but this is something that we are finding good momentum and good response, and we want to continue to build it in the long run also. Even after our, the goal of this critical care division within our TGX is to, find the distribution, build a distribution network to bring those products into the market, whether they are manufactured by us or from outside.
Got it. So, sir, just question linked to the first answer that you gave. So, if the API prices are still coming down, and we've reported 23% growth in our CDMO and 14% growth in our generic business, so does that mean that we've garnered a higher market share, or what has been the reason? Because ours is a cost plus model, so just wanted to understand what has contributed to the growth in a falling API environment.
No, see, the cost of API is incident. If you see, when API prices went up drastically, then also we delivered growth, right? So, I don't think that we can directly link, changes in input material costs to, being it as a driver of growth or not.
No, in this case, I was referring to as a driver of degrowth, given that prices are going down, and still we've reported good numbers. So I just wanted to understand where the growth has come from.
Yeah, see, you are asking whether unit realization is lesser for us, and despite that we have delivered good growth.
Yes.
Marginally, maybe. Marginally,
yeah. Unit realization is a little bit down, but that's for us not huge. Yeah.
Okay, understood. Thank you, sir.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
My questions have been answered. Yeah.
Thank you. Thank you very much, ladies and gentlemen. That was the last question for today. On behalf of Windlas Biotech Ltd, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.
Thank you very much.